Hey everybody, Andy here, and it's Saturday. You know what that means? Time for a quick look at the weekly charts. And this is going to be primarily a fast observational view, as not much has changed in the market. You can see the chart of the SPY here still moving higher and well above a rising 4-week moving average, or about 20 days if you're looking at a daily chart there. So we're going to go through pretty quickly. You can notice on a lot of these charts, RSI may be a little overheated. Volume is still pretty low. Nobody cares. Prices are still going up. So Qs, similar situation here. We do have an extension level up here at around 764. Just something to be mindful of, not a target, and it doesn't necessarily have to become resistance. DIA continued its breakout this week after consolidating for several weeks in this range. Last week was a big up green candle, and that got some follow through this week, so that's good there. And even the Russell gapped up and got stuck right around this extension level here, and I use stuck in a somewhat joking term here because that is a nice move to break free of the consolidation of these 3 weeks here. And notice the bounce from the VWAP off the March lows there on IWM as well. Bitcoin is not having a good time on the other side of the equation there. We've been watching this VWAP from the highs several times here, and now it's down below all the moving averages and nearly got down to touch the anchor off of this February low. Not quite, but that is a level of interest to watch on Bitcoin as it looks for some support here. The dollar still moving along sideways, no big development there. Volatility just kind of drifting lower, which is interesting. I actually saw several comments this week about rising volatility. Clearly, we see the VIX down near 15, which is pretty low, historically speaking. So, all cap world index broke out and put a little bit of a spinning top here above this range. Looking good on that. But within that group, China's still struggling. We can just put a little bit of a reference line in here for that. This is looking for some support here in this area around 35 on the FXI ETF. And China is really not participating much in this otherwise worldwide rally. Bonds with a save this week off of last week's beginning reversal, which followed a very strong down week, which had everyone focusing on rates and yields and what impact that may have on this strong bull market. That was the AGG. Here's the Treasury bond. It's nice recovery, but notice we're still below a declining 10-week moving average, still down in this consolidation area. No change in trend there yet, but it's something different as the prices are coming up there. At least they're not drifting lower consistently. So high yield bonds try to break out of this little descending bullish consolidation pattern, if you want to call it that. I think we looked at that last week and noted that it's kind of a bullish pattern, but we got to be mindful of where the moving averages are. So not incredibly bullish, but upward motion anyway on the high yield bonds. Commodities as a group took a little bit of a break, largely driven, of course, by the price of a barrel of oil, which came down after finding supply in this area, crude back down towards the center of the Bollinger Bands, and we still have this anchor from the low in mid-December of last year. That will be a reference point down here in the $82 range if crude were to continue lower. Here is gold. Gold found a little bit of a bounce where it's supposed to. We have a previous high back here and the rising 40-week moving average. So no change, just a bit of a break from the descent there in gold futures. Equal weight S&P, something I've been highlighting for the last couple of weeks. It finally got the breakout last week, got follow through this week, and so it seems to have clear air above. Maybe it tracks up like this, and I'm not going to try to predict the action, but something you want to watch for on any breakout really is a successful retest, if it even gets down that far. If profit takers come in and peel some off into the breakout, then that's the first thing you want to see is, can it defend and hold the breakout level? Equal weight NASDAQ is just incredibly strong there. And now we'll get into some of the deeper beneath the surface relationships and indicators, relative strength, participation, that kind of thing. Before we do that, though, I want to take another minute here and highlight the Alpha Trends offer we've got going on right now. This is really a robust bundle here for swing traders looking for guidance and education. Not only has Brian been doing this for many decades, and those of you that aren't brand new around here know that I've been with Alpha Trends for many months now. And we've got a Memorial Day sale offer going now that includes the addition of PhD psychologist Andrew Menaker. Dr. Menaker is a top-level trading coach, an active trader himself, and has worked with many industry greats over the years. He's got a wealth of wisdom to share with a developing trader. And so in this package right now, for this annual price, you get not only your Alpha Trends premium subscription, you get access to the stock trading courses, the advanced stock trading courses, Dr. Menaker's trading psychology course, which is very in-depth and very actionable. It's not just a bunch of concepts and platitudes about why you need to think differently. It's actual steps and processes you can put in place to improve your psychology around your trading, your thinking around your trading, and how to actually execute better. So you can look through the web page here. I'll put the link down below. It's really a great offer. And if you're looking to improve your swing trading, you're going to get so much from all of us, including many monthly educational webinars where you can send your questions in and get them answered by one of the three of us. There's going to be one seminar from Dr. Menaker specifically just talking about trading psychology. You get two from Brian a month and one from myself. Not only that, you've got access to the Discord channel where you can interact and get questions answered there. We've got daily market update videos coming a few times a day. We've got daily watch list and trade ideas coming at you every day. And these are not long videos that you got to spend a lot of time looking at. These are meant to be quick and concise and give you the information you need so that you can get your market plans in order and get on with the rest of your life. You've got other things to do, more than likely. This will put you in the right mindset and framing to get through the day successfully and profitably. We're going to look at low risk trade entry ideas day in and day out, and we're going to follow those with not only the watch list, but coaching and instruction to help you develop and improve your execution. When to buy, what's the trigger, what's the actual setup, when do you get in, when do you trim a position that's going in your favor, where do you set your stops along the way, how you move those stops up when positions work in your favor, and all of the things that you need to make your trading better. They're going to be available there. So come give us a shot. We'll be ready for you and working hard to help you make more money and protect what you've got. So getting back into the charts here, a couple things we go through every week. Here is the Russell 1000 growth individually and the Russell 1000 value individually. If we look at that relationship together, you can see that it's favoring growth. Growth has been stronger than value for many weeks in a row here. We saw this little double dip or divergence in the RSI reading as it got down low. And what I mean by that is RSI put in a low here while price was declining. Then it came back up, and when the relationship made a new low on the price relationship chart, RSI didn't get as low. I've highlighted that several times. If you're looking for that information, send me a note and I will post the video that explains why I believe that's important. Here was a similar occurrence on the upside. Not exactly, but very, very similar. And that is just another indication that we are very much in a risk-on environment right now. Is if price didn't tell you that enough, it is useful to look at these other relationships for an overall market view, because sometimes the potential red flags or potential warning signs can show up in these areas before we see it purely in the price action. So here is the S&P consumer discretionary sector. You see it breaking out of this range here. We looked at that the last couple of weeks, and now it's breaking out and not running away, but that is progress higher versus the staples had a pretty solid down week here. And so once again, that tells us when things are going well and people are comfortable spending money and taking risks, they're going to buy more of the things they want as opposed to the things they need. And that's what really is the difference between discretionaries and staples there. So if we look at the relationship stacked against each other, really solid 2 weeks here in the direction of favor for discretionary and testing a previous area here. This chart, this breakout is a little similar to XLY on its own, but when we look at it together, we can see that this is still an area that we want to pay a little bit of attention to. So a week 3 to take it up beyond this level and maybe into the declining upper Bollinger Band there, I think would be a very strong move and signal there for that relationship. S&P high beta versus low volatility. People are comfortable taking risk. No surprise there. We don't need to look at the equal weight versus the cap weight. That's not really telling us a lot. So we're going to jump into some individual sectors and some of the Mag 7 names here. The semiconductor index, that has been the leader, that remains the leader. It's still going up despite NVIDIA, which we'll look at in a few minutes, maybe lagging a little bit compared to some of the others. Biotechs I thought was pretty interesting this week. We've got this, biotechs look really susceptible to further downside back here, and that's when the whole market bottomed on this March 30 weekly candle here. It came and it bounced up and everything started to recover. Now we've had 7 weeks or 8 weeks of consolidation here, right at this level of previous highs from a couple of years ago, and it's looking like it wants to break out and move again. So we might want to keep an eye on the biotech sector there in the weeks ahead. Software, which so many thought were left for dead, myself included, looking at this chart back in early April, it just looked really terrible. And then we had a huge turnaround, and the momentum has continued with another huge green week here on the software sector, back up above this declining 40-week moving average, above the declining Bollinger Bands, and it looks to be like software is back. Not an overall change in the longer term trend here, as the 40-week is still declining, but that is just still one hell of an improvement in that sector. Mag 7 as a group looks pretty strong, just kind of moving ahead there. We'll look at one detractor in that sector here in a few minutes. The financials, which I looked at earlier this week and in last week's session, not breaking out, but not breaking down here. And I really think that that could be a catalyst for, as the market slows down, if and when it slows down, which it will do at some point, when we see things like the semiconductors and some other sectors take a break, again, if and when they ever do, buying rotation into the financials, I think would be a very healthy occurrence if we can see that happen. It hasn't taken place yet, but that would be something to watch for. If it breaks down and goes back down in this level, that's one of those potential red flags that I mentioned that may show up before we see overall degradation in price action in the actual index for the S&P 500, for instance. But so far, just chugging along here. The 4-week is flat, the 10-week is rising, and the 40-week is just slightly declining there. So it would be nice to see a resolution higher in the financial sector. Energy stocks trading similar to oil, not broken down, but looking susceptible here. And like I said earlier, you could call this a bearish consolidation pattern, except for the fact that it's still above a rising 20 and 40-week moving average. The 10-week and the 4-week are both now slightly declining, but it's still in the upper half of the Bollinger Band, so RSI up above the 50% level. So not broken, but just not quite going maybe the way that the energy bulls really want to see it happening. So now into some individual Mag 7 names. Apple, very strong, just incredibly powerful run here. 1, 2, 3, 4, 5, 6, 7, 8. Now 9 weeks in a row higher for Apple. Amazon rounded over a bit over the last few weeks. A little dip last week back to this extension level, this previous high, and it's back up above a rising 4-week moving average and looking better. Google doing a similar pattern here with the rounding over, but hadn't got the bounce yet like Amazon has. So we'll be watching that. There's a little bit of, with this big candle here and 4-week down at call it 350s, 348, there's some room here for further decline if Google wants to cool off some more. Meta has been the overall detractor for the Mag 7 as a group, and you can see it's just been stuck below this rate of trend here. And it's back over the 4-week and the 10-week, but still has a lot of work to do before we see an upward resolution or any kind of meaningful long-term trend change in trend there. Microsoft, on the other hand, which we compare and look at in alignment with the overall software sector. Of course, it's one of the largest holdings in that sector, but just a really, really big week in here for Microsoft. And I highlighted this on X a couple of times recently. This is the anchored VWAP from the all-time highs, and we've got one off the recent lows here, and it's just been bouncing around in there a bit. And now we have a resolution to the upside. I shared this on X yesterday. It gapped up above this VWAP, which it had had so much trouble with, and into another gap area, which is from the earnings back in early 2026. And now we've got a couple of reference points above, namely the declining 40-week moving average here. So all that is on X if you want to take another look at that. And then moving on to NVIDIA. It's certainly not broken. It's cooling a little bit. It's not exuding the same intensity of leadership as many other semiconductor names like an MU or even an Intel recently, that kind of thing. But holding up just fine, retesting this high from back in October of 2025 and doing okay there. Tesla has been mounting a comeback here, and it's not running away, but it's very gradually and consistently gotten back above all the moving averages. There's a lot of focus here with the news and constant conversation about the upcoming SpaceX IP, what's going on with Tesla, and so on and so forth. So this one is improving and just really a steady grind. What's interesting about this is were it to get above this 488 level, that would be a really meaningful development potentially. And again, like we mentioned earlier, potentially a breakout and a retest, and then Tesla could be off to new highs. But first thing it needs to do is make sure that it continue rising and hold these moving averages. We got the 4-week, the 40-week, the VWAP from the highs, the 10-week rising up down here, the 20-week or the center of the Bollinger Band's about flat, and there's a whole cluster of levels in here that's just been kind of messy. If it can accelerate and move away from that, that will be a strong indication for Tesla. And then a couple more things here. The percentage of S&P 500 stocks above a 50 and 200-day moving average. A little bit of a decline here this week, but we've noticed this overall pattern of choppiness back and forth right around the middle of the range. It's not running away. It's not broken. It's holding up just fine. And we know that it's not causing any real problem because the price of the S&P 500 continues to rise steadily. Last bit of charts on the list here, as we always do, looking at the bullish percent indices, this one on the S&P 500. And much like the chart we just looked at with the percentage of stocks above a 50 and 200-day moving average, this is holding up just fine in the middle of the range area. It's called a bull confirmed status on this chart, being terribly indicative there, but the pattern and the action is what matters more to me. Looking at the NASDAQ 100 bullish percent, strong recovery all the way back up to these previous highs and looking just fine there. And then finally considering the NYSE, which is kind of the old gold standard and bullish percent indices. Again, it's consolidating. It's putting in smaller ranges right here near the middle of the band, and that is just fine. So we see decent participation holding up there as far as the bullish percent indices and the percentage of stocks above a 50 and 200-day moving average. So there's your quick look at the markets. Again, nothing incredible has changed. The strength continues. It can be a little hard to get a hold of, so that's when we need to come down to the smaller time frames and look for low risk entries, the daily charts, the 30-minute charts, my roadmap chart. These are the kinds of things. And for instance, when the S&P and the Qs got back above 5-day moving average, consolidated, and then broke out, these are the kinds of tactics that you can look at to take low risk entries and get involved in a rally that has many confounded and frustrated that they aren't in it as much as they want to be, and they don't feel comfortable buying something that has already run so far. So that's where these tools are useful. These are the kinds of things that we lay out for you every day in Alpha Trends. Daily market updates. So you're going to know, when are those indices moving back over a rising 5-day moving average? When are they making a series of higher highs and higher lows above a rising 5-day? When does that change and tell you to get more cautious? How does that affect your individual positions or your watch list? We've got all of this for you day in and day out from Brian Shannon, myself, and now the addition of Dr. Andrew Mineker, trading psychologist and PhD. So come give it a shot, take a look around, join us for a while and see what you think. We will absolutely help you level up your swing trading experience and skill set, and we would love to see you there. So have a great rest of your weekend. We'll look forward to seeing you at Alpha Trends.